Hello there. It's a new year. It's a new year, 2025. And yes, it is almost the end of January. Almost the end of January. But since this is the first time that I'm coming to you live, so to speak, I think it is still in order that I should say Happy New Year, Happy New Year. Of course, the new year always bring a lot of newness as we look forward to what it is that we intend to achieve as the year unfolds. And also for us in this neck of the woods, the new year, which kicks off with the first quarter, has a lot of significance because that's the time we talk about the tax season. And so today is the 27th, and today is the day where the IRS has started to accept tax returns according to their announcement. So I just thought I would stop by to do my usual tidbits to kind of bring you up to speed with a couple of things that are supposed to be happening, tax related on the broader spectrum of what I call our planning for the new year or financial planning for 2025. By now, I'm hoping that I'm a staple, and so most would know the name and the platform on which I come. But for my new friends out there, my name is David Etienne. I'm the owner, CEO of both Etienne Business Solutions, which is an accounting firm, tax and accounting firm, and also um, owner, CEO of a consulting practice, Etienne Strategic Management Consulting. Today, I want to do two things. One, give you a few little updates on what I call housekeeping things that are in the pipeline to come, but more specific to the tax season, to bring you up to speed with a very very important area, and that has to do with digital assets. In other words, tax reporting for your digital assets, your digital transactions. Let me do the housekeeping first and foremost. Now, we're having our seminar seminar. Each year we try to put on two, sometimes three seminars, but even if we do not succeed in putting on all three, we always like to start the year with one of our seminars. That is so too because it helps us to get right into the tidbits that are necessary for our tax season. At the same time, it helps us to really get into our planning for the year. Hence, we have. So, on Thursday, this week, Thursday, January 30 at 6 p.m. is when we're going to be having our seminar. And of course, yes, it's online via Zoom. So I encourage you to jump on board, go to my website, www.myebsolutions.com and register. Ensure to register early. In addition to registering, and it's a free seminar, just interactive free seminar. In addition to registering, you will see that there is a little self-assessment, business assessment form that will be very helpful if you would take the time to complete and submit that to us. It helps us here to streamline the seminar in the directions of interest as you indicate, and also give us an insight into you as a business person, a little bit of the anatomy and the characteristics of your business, and most importantly, expose us to the things that you think are pertinent, are more topical, immediate, that you want to address as you go into your planning session going forward. Again, well, in addition to that, It's January, beginning of the tax season, and so this is a time when a lot of documents and information submission is taking place for the purpose of preparing taxes. We try our best to streamline the process so that it is very convenient for you, and it also facilitates efficient handling and processing of your tax returns. So to that, in that regard, we are encouraging, really encouraging that you utilize our intake form or intake portal, which can again be found on our website, www.myebsolutions.com. Go to our website and click on the intake link, and that should allow you to provide us with all necessary information and all necessary documentation, because there's the ability to provide information and at the same time to attach documents. We have upgraded the portal this time around so that new clients, there's a link for new clients where you can provide all your information. There's also a separate link for our existing and returning clients. The thinking is that most of the information we have already had from prior years, so there's no point taking you to a form that is asking for all those things. So your returning client link only asks for any changes and of course new tax documents that you will be uploading for the 2024 taxes that is going to be prepared now in 25. Those are the two little housekeeping things I would want to quickly get out of the way and to remind you about. But it's very important. We're really looking forward to you joining us on Thursday at 6 p.m. online for our seminar. Very important seminar. We're going to be looking at the whole planning, financial strategic planning for the year 2025. And we're going to try to cover a whole range of stuff. A lot will be applicable to you, some may not be, but at least you will find something. You will find something or some areas that are applicable and that you can put to use. Having said that, let's jump right into digital assets. Now, digital assets, yes, may sound like a fancy. Let's just go to the common word on the road, cryptocurrency. Cryptocurrency. So for a few years now, we have been looking or being bombarded with a movement into cryptocurrency. What I'm about to say here, the guidance I'm about to give you on cryptocurrency, specifically with how do you track, manage, account for, and report for tax purposes, okay? What I'm about to give you here is what I would call the brief anatomy of the process. Accounting for and reporting cryptocurrency is quite involved. I would not necessarily say it's difficult, but it's quite involved. Okay, having quite a few steps. So if you know this applies to you, in addition to what we'll quickly go through this on this session, I would encourage you to do some more research and speak to your professional service provider to get a deeper understanding of what are the requirements. Okay. Now, when we talk about digital assets, most of us are accustomed to undertaking transactions using this thing, cryptocurrency transactions, okay? Transaction, buy and sell, whether goods or services. That's what we're most accustomed to. But the broader classification or categorization is really digital assets, a digital asset. Now, what is very important about this, and don't be turned off by the fancy terms, what's very important about this is that digital assets are considered to be property. That's a key mark, that a differentiating point that needs to be understood. Digital assets are regarded as property, not currency. Okay, they are property. Good. And you soon see, the implication of this classification. So because it is referred to as property, then like all property, it has value. And you're able to use this value to engage in transactions. But the digital asset itself is not classified as currency. So do not confuse a 10 US dollar value of a digital asset with a 10 US dollar bill. The 10 US dollar bill is currency. The digital asset that you have that may have a 10 US dollar value that you will use to execute a transaction is not in itself currency. It is an asset that has value, and you're using this value to execute or to undertake a transaction. The transaction may be something in your normal everyday trade business, or it may be more to undertake some kind of investment, whatever it is, whatever the transaction. Think of a digital asset as something of value. It's an asset, and you're going to be using the value tied up in this asset to execute a transaction. That's very important when it comes to reporting and reporting in your financial statement, yes, but at the same time too in terms of the reporting for tax purpose. Very, 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 very important. So then, how is that digital asset used? Simple. You use it to buy goods and services. Okay? Use it to pay for goods and services because it has value. It has value. You can trade it. Again, because it is an asset, you can trade it. You can buy and sell the actual asset. So, mark you can use the value of the asset for regular trading, buying goods or services, or you can actually trade that asset because it has value. And also, you're able to convert this asset into actual currency. All right, very flexible, very flexible. So the way that it is used, the way that it is applied in a particular transaction will have some significance to how it is reported on your financial statement and also to how it is handled for tax reporting purposes. Now, you would have recalled that for a couple of years now, when you're doing your tax, when you're completing your tax form, there's a section that asks, have you done any transaction, any transaction involving digital currency or digital assets? For most individuals, the answer is no and continues to be no. But it is true that there are individuals who have in the past indicated no incorrectly because inadvertently they have not recognized that their dealing in these digital assets would warrant or would require that they answer yes to that question, and having answered yes to that question, that the required reporting ought to be undertaken. So if you have received digital assets in the course of the year, whether by, in whatever field, you trade, you invest, you exchange, whatever it is, if you were in possession, then you would have to report. And the way this comes, the way this asset will come to you would be just about in any form. But as I said, what most people are accustomed to is through trading, normal buying and selling. And that's how they would come in possession of that digital asset. Okay. Now, some key things here to note. Digital assets, I said it earlier, can be sold, can be exchanged, and can be converted into actual currency. Actual currency. It is a value. It is a value. Okay. Now, what it means is that if you have what we call a financial interest in digital asset, some reporting is required. some reporting is required. Now, the IRS has some very clear rules as to how digital assets ought to be reported. And the way it is reported, the form on which it is reported, is directly linked to the nature of the transaction that ensued in the course of the year. And therefore, these things are very, very important for you to be mindful of, so that not only would you well, report the transaction as required, but that you would correctly report it, because, as I said earlier on, the nature of the transaction will dictate where on the tax form it is reported, what tax form is used to report it. Okay, because it has different implications. Now we talk about, I mentioned the word transactions. Now, whenever you have a transaction, there's likely to be either a gain or a loss. A gain or a loss. So once you have a transaction in a digital asset, number one, there's a reporting requirement. Number two, if you have a gain or a loss, that will be part of the reporting requirement. But note, very important, note, even in the absence of a gain or loss through trading, once you are in possession of digital assets, they need to be reported. Okay, good. So then, the first thing we're looking at is proper record keeping. You need to keep record of your digital assets and the transactions that you undertake and the values of those transactions, meaning if it's something that you buy, what is the buying price, what is the selling price, etc., to determine whether or not you have made a gain or a loss, and therefore how to go about reporting it. So the process usually is, in terms of you getting ready and moving towards reporting, the first thing first is to keep clear record. And we're going to look at in a little more detail at each of these components. But number one, yes, you must keep clear record. Secondly, you have to calculate whether or not you have what we call a capital gain or loss. Okay, and if you notice, I have tapped on the word capital before I say gain or loss. And that, in essence, is important because it is saying that this gain or loss is not just a regular gain or loss as you identify and report from just buying and selling using dollars. No, this is a capital gain or loss, and it is so described because we're talking about gain or loss arising from a transaction that involved a capital asset. Okay, a digital asset, right? So hence why. Now we also have a requirement that in order to correctly report, you have to determine what we call the basis. Now that is a little challenging for some folks, because we say, okay, yes, you need to know the basis, because in a general sense, for you to determine this gain or loss, you need to compare two numbers. Simple. Okay, and one of the numbers would be whatever you receive, which would be, say, the fair market value. So if you entered in a transaction and you got value of $20,000, then that's a fair market value of the transaction, what you receive. But then you want to say, okay, what is the value that I gave up? Because it is a transaction. You gave, you receive. And so in order to come up with the correct capital gain or loss that you incurred, then we need to compare two numbers, which would be the fair market value, mean what you sold or what you're transacting to receive value, and also what you gave up, which would be the basis in this transaction. Once you have determined that gain or loss, as I said earlier on, depending on the nature of the transaction that gave rise to this gain or loss, then you will have to go to the next step, which is to report the transaction on your tax form, but ensure to report it on the correct form or the correct schedule, and in correct, well, of course, the correct section of the tax returns, okay? Because different things have different implications, right? So that is very, very, very important. Now, let's talk a little bit about keeping the record. And it's simple, just as it says. Keeping record is just keeping record, okay? So your purchases that you have made, the receipts that you have, the sales that you have, any exchange that you made, any disposition of your assets, all those are transactions. You need to keep a record, clear, detailed record of these transactions. A transaction will result in a selling price. And so the fair market value of this asset must be determined. And the fair market value for our purpose here naturally ought to be denominated in US dollars. Because see, we're talking about digital assets, cryptocurrencies, etc. So a lot of different currencies come into play. But we're talking about reporting your transaction on a US tax returns. So although those transactions may be denominated in other currencies, they need to be converted to US value so that when you come up with what we call, when you come up with a value, a fair market value of the transaction, it ought to be expressed in US dollars. Okay, so that's right. For the record keeping, two key things. All your details, all your documents, all your things that show your sales, your purchases, the exchange, etc., etc., and also a determination of the fair market value of the transactions expressed in US dollars. You're dealing with a US tax returns. So that is on one side. Let's talk about now the basis. Let's talk about the basis. And some people might say, let's talk about the cost to you, the cost to you. Now, usually if you talk about an asset and you buy an asset, you have to pay $10,000 for it. The cost is $10,000, and sometimes we may just say the base is also $10,000. In accounting, it's not quite that way, because having bought the thing for $10,000 in year one, in year 5, a number of things may and could have happened to change the basis, the today's cost of this item from the 10,000 to another number. Yes, we can talk about depreciation of the asset or appreciation of the asset. We can also talk about anything to do with, let's just say it was a building, there may have been significant improvement, etc., etc. So a number of things could cause the basis, the today's cost, to be different from what you bought it for back then. So we have to determine the basis of that property. So once we know the basis and we know the fair market value, then we have the two numbers that we need for comparison, and that will help us then now to determine our capital gain or capital loss. Okay. When you're in your tax returns and reporting this information, it asks for some, bits of information to help to calculate, etc. Calculate the result. And so it will ask for the type of digital asset, the date of your transaction, the number of units, maybe denominated in units sold, units purchased. As I said, the fair market value, which must be expressed in US dollars, and the basis. So once you have all those bits and pieces, you are now in a position to determine what is your capital gain or capital loss. Good. Now, we talk about capital gain, capital loss. And even outside of digital assets or cryptocurrency or whatever, when we talk about capital gain and capital loss, we also want to go a step further to ask the question, is this gain or loss a short-term capital gain or loss, or is it a long-term capital gain or loss? The principle is universal, okay? No different because it is digital asset. A long-term capital gain or loss versus a short-term capital gain or loss. And long-term is usually based on timeline. So anything that so if you had this digital asset and you had it for a greater than a year or greater, then we're talking about a long term. So if you bought it January 1, 2024, and you're selling it now in January 31st, 2025, you'd have held it for more than a year. And so whatever gain or loss you calculate on that transaction will be reported as a long-term capital gain or loss. So the opposite is true. If it is less than the year, then it is treated as a short-term capital gain or loss. Short-term capital gain or loss. Again, we need to be mindful that some transactions using digital assets may be categorized. Okay, some transactions that using digital assets that result in a gain or a loss may indicate or point us to whether or not that gain or loss is to be referred to as a capital gain or loss or an ordinary gain or loss. Okay? Very, very important. Very important. The nature of the transaction. So it is clear here again in the IRS literature. If you own digital assets for personal, follow me now, if you own digital assets and it is for personal or investment purposes, then any gain that you make on a transaction in this arena would be treated as what we call a capital gain, or if it's a loss, then a capital loss. Okay, and that is when you, of course, transact, you dispose of it. So I repeat, once you're holding digital assets and the purpose is personal, okay, you're holding for personal use or for investment purpose, then when you trade, if there's a gain or a loss, this is going to be treated as a capital gain or a capital loss. And a little further down, we look to see how that is reported. On the other hand, if you utilize these digital assets for the purpose of regular exchange of goods and services in a normal trading scenario, market, remember now, you're not using currency, you're using the value represented in this digital asset to undertake a normal exchange of goods and services. If that is the case, then we're saying that any gain or loss will be treated as an ordinary gain or an ordinary loss. Okay, so we look at when the gain or loss is short term or long term, because the reporting is different. We also look to see where the loss or gain is going to be treated as a capital gain loss, or if it's going to be treated as an ordinary income or an ordinary loss, ordinary gain or an ordinary loss. Okay, that again, very, 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 very important. And I'm going to repeat as I started, there's a lot more to this. And if you think reporting of digital assets, cryptocurrency, whatever, applies to you, you definitely need to get some more information. Depend on your advisor, your informed tax preparer, or also is your trusted provider to explain so that you have the correct reporting of this of this transaction or these transactions. Now we're talking about, so those are basically the components that we need to consider in ensuring that we come up with the correct calculation and the classification of these transactions and the resulting gain or loss, and whether or not they are to be treated and classified and treated as capital or ordinary. Okay? So then let's jump straight there now to the reporting on our tax returns, because all that I said to you earlier on, very important for for your financial statement and properly categorizing. But now that you have done all of that, how do we report them on the tax returns? How do we report them? We're going straight again to the provisions, and I just say this for emphasis. When you try to research anything, especially tax related, you're going to have a lot of online. You will find a lot of results from your search when you try to investigate a particular. A lot of them are correct, spot on, correct. There are some though that could be less than correct. My advice usually is, once you're trying to research anything tax related, go to the Bible. The Bible, the Bible. What's the Bible? It is the IRS publications. I agree that those publications are lengthy and the language is very heavy and thick, and sometimes it's hard to understand, and it's very, it's a turn off, when the lay person tried to sift through them. But to a large extent, you can find the essence of what the rule requires. So I'm just trying to say, be very wary that if sometimes you just go online, find an article, you read it, and it may not necessarily be the 100% correct thing that you're looking for. That's very important. So I always like to give my listeners what the IRS Bible, the IRS publication says on the matter, and then we can always expand and apply it specifically to your circumstances. But we always want to start with the scripture. You know what I mean? We want to start with the scripture. So listen carefully here. The form that you use, as I said earlier, depends on the type of transaction. So let's look at, there's a form in the tax return called a Form 8949. And basically that form has to do with sales and other disposition of capital assets. So right away you can see, if you sold or exchanged digital assets, then right away you're talking about a capital asset transaction. A capital asset transaction is required to be reported on the Form 8949 in your tax returns. Cool. Now, let us say that you had ordinary income. Remember I said that although you're using a digital asset, you could actually engage in a normal trading transaction. So if what you have is what we refer to as ordinary income, okay, resulting from the use of these digital assets, then the reporting of this income now is to be seen or to be reflected on your regular 1040 tax form, but specifically on what they call a Schedule 1. Because remember that Schedule 1 is where you have other income. So you may have your W-2 income, your 1099 income, your Social Security, your pension, etc., etc. But then Schedule 1 is that form that you use to capture other income. And because we're classifying this year as ordinary income, not capital, ordinary, then we're going to put it on Schedule 1. So Schedule 1 information naturally flows onto the face of the tax return, the 1040. But that is where we would have it. So if it is ordinary income or loss resulting from a normal trade that utilized digital currency, digital asset, then it means that we're just going to be reporting it as ordinary income on Schedule 1 that will end up finding its way on the face of the 1040 as additional income. Because digital assets are something of value, you could always decide, I'm going to make a gift. You make, just like you can make a gift of $100 to a person, you can actually give them some digital assets for gift. So the whole consideration of gift and the taxation of gifts now comes into play. And so the tax form now have a form 709, which is usually what you use to report your gift giving, so that the proper accounting can be done. So you use form 709, which is United States gift, the form where you report your gift, so that you can reflect that on your tax returns. Here's an interesting section now. Now we want to look at where an individual receives digital asset as compensation. But let's differentiate between when a person receives a digital asset as compensation in the capacity of an employee, separate and apart from when an individual receives digital asset as compensation in the capacity of a contractor. The treatment totally different. So, as an employee, okay, let us say you receive your wages, and yes, your boss decided, okay, I'm going to pay you in some kind of digital asset. It is still income to you. It's income. It's income for the service that you're providing in your capacity of an employee. And so you need to report like all other income. And so as an employee, you receive that thing for your wages, and so you're just going to be reporting it on your 1040, on your regular tax return as income. That's what it is. Okay? So if you notice, there's no complexity here. If you're a contractor, on the other hand, and you receive value for services that you provided in that capacity, then you would report that on your Schedule C. Yes, it will eventually flow over onto your 1040, but it will first find its place on your Schedule C. On your Schedule C, where you report all your business income and expenses, and then that would find its way on your 1040. That's the most that I would want to say about digital asset, how you ensure that you're capturing all the information that's required to help you to determine the nature of the transaction, how to compute gains and losses on that transaction, and having computed the gains and losses, how do you report them, whether it be a financial statement reporting, which we have not gone into in depth, but more so how we would end up reporting these transactions on our tax returns. Okay, that's very, very, very important. More so now than prior years, the emphasis on ensuring that digital transactions in digital assets are done. There's more emphasis on ensuring that these things are done and are done correctly. So you're encouraged to really get on board, get to understand. First and foremost, okay, once you fall in that category of individuals who have been involved in digital asset transactions of whatever type, then get prepared to tick yes on that tax form when the question is asked, and then ensure that you properly report. A lot of taxpayers would not be preparing the tax returns themselves. So if you're accustomed to preparing your own tax returns, be careful. Be careful. If you want to continue to do that, just make sure you get all the information so you properly report. If you think, okay, so far my tax return was pretty simple and manageable, but right now I'm touching an area that is a little more complex, you may wish to reach out to a professional. And word of caution, I said to a professional, okay? To a professional, all right? Because I'm just saying, you will have tax preparers who are not necessarily knowledgeable, comfortable with these areas, and could end up putting you in the lurch. We do not want that. So be wise, be discerning, so to speak, and know that you deal with an area that is pretty complex and so need to be treated with some level of expertise and knowledge. That's my bit for today, but before I run off, I'll just remind you that this Thursday at 6 p.m. now, remember, we have our seminar where we're looking at our financial and strategic planning for 2025. Okay, so I encourage you jump online. As a matter of fact, I think I will. Let me see if it's possible for me to find. I mean, I've said it over and over, but let me see if I can find a caption that has my website streaming across it. Where is it? Okay, I think, yeah, very easy website to find. So there it is, myevsolutions.com. Go, just jump on board and get yourself registered and ready, and fill out the little questionnaire, self-assessment type of thing. Very short. And be prepared and join me on Thursday, and we'll have a fulsome discussion as to how we go about ensuring that we look at all the various components that are necessary for a proper strategic planning for the year 2025. So that's it for now. David Etienne saying bye, and look forward to working with you throughout this busy tax season and in the future. And I hope and trust that you will consider Etienne Business Solutions and Etienne Strategic Management Consulting as your place to go for proper financial guidance. I also want to remind and to inform that we have a YouTube channel, Etienne Splits. Let me see if I can, okay, sure. So we also have our YouTube channel, Etienne Splits. Forget about the Tuesdays at 8 p.m. That's when we in the past we used to have the timing, but right now we have a long list of recordings that are posted on our YouTube channel that you will find very informative, very helpful, encouraging you also to check those and be informed, be empowered, be informed, be empowered. And the last thing I'll leave you with is, and I'm just showing you all the little bits and pieces that we're into, under the banner or on the platform of our consulting practice. We have our podcast where we feature industry leaders, industry experts, and so our podcast is Crossroads. Oh, okay, I can see behind, but it is this hand. Huh? I can see behind me that there's my Crossroads Navigating Business Challenges is where we actually have industry experts coming on to share with us some tidbits and to empower us on this road to basically identifying, navigating business challenges that we face from time to time. Having said that, that's my bit. Enjoy the rest of the day, the week, and as I said before, get your documents together, put everything in order, get ready. Okay, do not procrastinate, and remember now, utilize our intake link on our website. That will facilitate you submitting all information, all documentation for a smooth, seamless, efficient delivery of service. Thank you.